There is a famous saying, trading should be boring. If it excites you, you are in the wrong track. So if you recognize these lines, then things have not changed for USD JPY. Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USD JPY, US dollar, Japanese yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the chart of US dollar Japanese yen, and if you have watched my previous videos on USD JPY, then I'm sorry to say things have not changed in USD JPY. Yes, things are still very boring because see, market was in downturn and after the market tried to go up, but right now we can easily see that market is in a range, market is in sideways. Okay, and as long as market is in this range, we are not getting any big move. Okay, so only two good trading opportunities in this chart, okay, are at this support level and at this resistance level, because see, this is a sideways market. As of now, market is in sideways, so all we have only two important levels. This is the support 108.34 and here 109.73. This is the resistance and this is the support, and as long as market is in this range or market is trading in between these two lines, then we do not need to trade, because this is our no trading zone. These are no trading zone because see, if you go ahead and buy here right now, then your stop loss will be here. Okay, then see, the gap is too much. Okay, and you are also not sure whether the market will go up or not, and there is no proper logic behind placing the buy order at this price level. Similarly, if you go ahead and short the market here, there is no proper logic to short the market here. If you short the market here or if you go and buy here right now, this is not trading, this is not technical analysis, you'll be just gambling. Okay, therefore do not gamble, be a trader. Do not be a gambler, be a trader. Anyways, and if you trade in the middle, then your risk to reward ratio also does not match, and you'll be going against the trading discipline. As I always say, you should never ever compromise with the discipline. Therefore, wait for the market to come down to the support zone or go to the resistance zone. If market comes down to the support zone 108.34 level, just observe the price. If you see that price is about to bounce back from here, then you can go ahead and place the buy order. You'll get the confirmation in the form of a hammer, price rejection from below, or a green candle like this. Because see, whenever market came down to this 108.34 level, okay, it bounced. Just look at this candle, and almost this also. So whenever market came down to this level somehow provided the support, required support to the market. So there's a good amount of possibility that market will get the support, and yes, it will bounce. If it bounces, you can go for a buy order. Otherwise, no trading in this range. On the other hand, okay, on the other hand, uh, if market goes up, okay, if market goes up to this level 109.73 level, then your duty will be to observe the price again, because see, this is a resistance, and resistance is not a very simple resistance. I would like to show you. I have already shown in my previous videos, but I would like to show you again. This, can you see this line? Can you see this orange line? This is a resistance in the weekly chart. I am in the weekly chart right now, and you can see that this week market has formed a doji kind of a pattern. Previous week market formed a red kind of a spinning top pattern. Okay, 1 2 3 4 5 6 7. Okay, for 7 weeks, this is the seventh week, and for 7 weeks market is trying to cross this level 109.7 level, but market is unable to cross the level. Therefore this level has turned out to be very crucial for the market, very crucial for the market. Therefore there is a good chance that if market, where is my pencil? Okay, if market goes up and hit this resistance level, okay, then market will reverse. If you see that price is struggling, price is unable to breathe at this level. If you see that price is struggling, price is trembling, okay, then you'll get the confirmation that yes, the resistance is still valid. Okay, sellers are still present in the market, they are pushing the price downward. If you get the confirmation in the form of a hammer, sorry, shooting star kind of a pattern, or a red candle like this, or price rejection from above like this, once you get the confirmation that yes, sellers are still there and they are kicking the price, then you can short the market this level. On the other hand, okay, if it crosses this level, okay, if it crosses this level, then wait for at least 4 to 8 hours. Okay, wait for 4 to 8 hours and just observe the price. Try to understand the market psychology. If you see that after 4 to 8 hours price is trading comfortably, no price struggle, then you'll get the confirmation that resistance has become the support and you can go for buy order. But if it reverses, you can short the market. So two main trading possibilities and opportunities in USD JPY chart. First is go for a buy order at 108.3 level and go for sell order at 109.7 level. Okay, and as long as market is trading between these two levels, do not trade. Be a trader, not a gambler. This is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care.